Hello, this is Caleb Barney with Russell Real Estate, and today I wanted to go over a really cool loan program that one of the companies, one of the lenders that I work with, offers. So, Your Home Financial offers a loan recasting program, and I sent this email to Tim Rhodes, who is one of the loan officers over there that I like working with, and just wanted to make sure I got everything right before trying to explain this. And of course, I would always refer back to him for anything with a little more details and just for more clarification. But basically, the loan recasting program is a really cool program that can allow certain homeowners to not have a home sale contingency in order to purchase their next home. And the reason why that's so important from my end is that a home sale contingency just makes your offer a little weaker in today's strong seller's market. Because essentially, say you write a full price asking offer for a house or more, and somebody else does the same thing, but your offer is contingent on you selling your home. Well, that listing agent and that seller has to be comfortable with your home selling relatively quickly. Otherwise, it's either going to kill their deal and make their home go back on the market, which never looks good, or it's just going to prolong their deal from closing because they will have to wait at least 30 days typically for you to close your home before you'll have the funds to make the purchase on this home. So anyways, I'm just going to use an example. I thought it was pretty cool using this loan recasting program. So basically I said, let's say I have a client who has a home that will sell for about $225,000. Right now they have a house sale contingency and they have $20,000 liquid, so basically in the bank, that they could use for a down payment until their house sells. Let's say that we find the perfect home for them at $275,000. They could put 5% down and then cover the remaining closing costs for any inspections, title work, etc. In this scenario, they would have PMI and it would remain on the loan until they hit the 80% loan to value, and then it would drop off. By the way, per Tim, he did reply to my email. He just said that PMI is based on credit score, and with a good credit score, you could basically pay as little as $40 per month per $100,000 lent out to you. Anyways, by doing this, putting the 5% down, they would not have the house sale contingency, making their offer more competitive in today's market. And then let's say we would sell their home for that $225,000, of which they would net $130,000 after paying off their current mortgage, title work, commissions, etc. Then, because you would have $130,000 in the bank, or they would have to put down at least 10% on the new home once they sell their old one. Of course, if you're only putting down 5% for the initial down payment, I'd probably put down 15% here, just so you could knock off that PMI. But they could put down as much as they wanted, even up to that $130,000 if they so desired. So whatever amount they put down would be applied directly to the principal balance, and then the loan would be recasted, which means that Your Home Financial would amortize the new balance. So they would structure your payments based on the new balance while keeping the length of the original loan the same. Meanwhile, you get to keep the same interest rate that you had initially with the old loan, and I consider that a plus considering rates are projected to rise throughout the year, and they would only have to pay a small fee to reconfigure the loan. So the loan recasting fee is only about $300 to $400. So basically, I said if they wanted to put $100,000 toward their new loan and have a cash balance of $30,000, just for things that maybe you wanted to update or a rainy day fund, we would say home values at $275,000. You'd have $113,750 in home equity. Your balance would be $161,250, and the interest rate would be the same as whatever you purchased it previously. And then, of course, with that scenario, you would have no PMI. So that's just one of the really cool parts for the loan recasting program. If you want to see how this can help you, definitely reach out to me, and I'd be happy to help.